All right, welcome back to Menzo Pass. This is our live webinar for our life insurance exam. So we're just training people. So today we're gonna have one student, Uno. We have Rebecca. She's from Nevada. Um, and she's here with us. If you watch part 1 or part 2 of our webinar, she was on. She's going to be taking her exam next month. And believe it or not, guys, this is her birthday. But it just tells you how super, ambitious she is. She's like, you know what? I am going to get this thing. I don't care birthday or not. I got to put in the work, you know. So she's here. I like that kind of commitment. She's not making any excuses. She even took some time off work for her to do this. So that's the kind of those are the people who succeed, right? People who don't make excuses. So we're excited to have Rebecca back here with us. Now, before we can start with our training, just a quick reminder here. So we have our webinar, live webinar is 100% free. Everybody likes free. So you can sign up. We're going to have the link in the description. If you're listening to this in the, on the podcast, we'll have the link in the description. If you're listening, if you're watching this on YouTube or on Instagram or TikTok, wherever, we'll have the link in the description. So you just click on that link. You register for the webinar. Again, it's 100% free. You don't have to pay anything. And then, but remember to confirm your registration. So you're going to get a confirmation email, and you just click on that email to confirm. So that's it. The other thing here, to just let you guys know, we know that times are tough, right? So even though our courses, our self-study courses are very affordable, but some people still cannot afford that. So we, unlike any of the other major life insurance pre-licensing providers, we also, we do something very unique. That is, we offer payment plans. So if you cannot afford to pay upfront for our self-study course, or it can be our one-on-one training, you can do installment payments, right? So you can pay as little as, for our self-study, you can pay as little as $55 a month. And in that way, not having money will not be any barrier for getting that license, because the insurance industry is a great industry, but in order to get in it, you have to be licensed. And we try to make that as easy as possible for everyone. So you can check our website. You have that on the installment plans. The other thing to let you know, again, as I've said in previous episodes, we're a brand new life insurance pre-licensing provider. So we're still working on putting together our pre-licensing course for other states, right? So we don't have all 50 states yet, but what we're offering you right now is a major deal. If you pre-purchase any of our self-study courses, right? So you purchase before we have them ready, then you're going to get a 70% discount. Again, 70% discount. So instead of paying $165 for our self-study course, you're going to pay only $49, right? So you'll be saving about $116. So that's major deal. You can check our website. You're going to see that there. All right. So without too much delay, I'll have, for those of you who didn't watch part 1 and part 2 of the webinar, I'll have Rebecca, just introduce herself again. Happy birthday. Have her introduce yourself again, and then we can go from there.
All right. My name's Rebecca, and today is my 44th birthday. I'm excited to
Oh,
be
you don't have to call the age.
here because it doesn't show, I feel like I'm right in the middle. I'm young, I'm not too old, so it doesn't matter where they're at. Come on and just get this study course going, and yeah, let's sell life insurance.
All right, guys, it's a birthday. I mean, think about it, right? Many people will find, hey, it's my birthday. I can't do anything. Oh, I don't feel good. No, people come up for a million reasons why they can't get stuff done, right? But who wants to do something, they'll always find that reason to get it done. All right. So last time, the previous episode, we talked about third-party ownership of life insurance, and we talked about life settlements. Just to recap, I just like to make sure people understand. So before we move on to group life insurance, which is what we're going to do today, let's just have you recap that. So tell me everything you know about third-party ownership of life insurance.
So third-party ownership is when it is partner to partner, child to parent, parent to child, business who has a valuable employee, or even a business to business partner.
Okay. All right. Perfect. But the key, yeah, now that's true. Now, what must exist for someone to get life insurance on another person?
Insurable interest.
Perfect. And in your own words, what is insurable interest?
So, having something to lose in case of a death, basically.
Perfect. And we said yesterday, that is why people cannot get life insurance on strangers, right? You can't get life insurance on your neighbor, right? Or you can't get life insurance on your workmate. Why? Because you don't have any insurable interest in that. And we know the reason we have insurable interest is, let's face it, it's a real world. People sometimes will harm you to get that death benefit, right? So we want to make sure that for someone to get life insurance on you, the person must stand, you must be worth more to that person alive than dead, right? So that's insurable interest. Okay, perfect. Now, who are the parties to a life insurance contract? Or what?
The policy holder and the insured.
Insurance.
Insurer.
Insurance. Okay, perfect. That's good. All right. Can the insured ED ever be changed?
No.
Perfect. Again,
Sure can, because they can sell it, but not the insured.
so the policy owner can be changed, the beneficiary can be changed, but the insured ED cannot be changed as long as that policy is in force. Okay, good job, good job. Let's come to life settlement. So tell me, in your own words, what is life settlement?
So life settlement is getting the policy and selling it to another person.
Perfect, perfect. Now, when you have a life settlement, are you selling it for greater than the face amount, same amount, or less?
Less.
Perfect. All right. Now, what's the difference between life settlement and a viatical settlement?
Viatical, you have to be terminally ill.
Perfect. Wow, good job. Good job. All right. All right. So now we're going to move on to group life insurance. But as usual, we like to start with questions.
Okay.
Come back and explain. So I'll go ahead here and share my screen. All right. So this right here is group life insurance, right? So you can take that. I'll give you about 1 minute for each question. All right. So you just again, you can write your answers down or you can text in the group chat. So just write 1 and then correct answer, 2, B, 3, C, whatever the answer is. So give you 1 minute to answer. When you're done, before you can just let me know done, then I can go to the next one.
Okay.
Okay. So just text put your answer in the group chat here, in the Zoom group chat. Okay, we got 30 seconds. All right, so you selected B. The answer is B. Good job. Next one here, number 2. And just put your answer there. All right, so you selected B. The correct answer is B. Good job. All right. Number 3, what is true about group life insurance? All right, so you selected D. So let's see if you're correct. Good. Wow, look at that. D is correct. Doing good job. All right. So that concludes it for group life insurance. Man, we should get a round of applause. Good job. Good job. All right. So let's go back. This overview of group insurance. All right. So let's talk about group life insurance. So I'm going to give I'm going to compare and contrast group and individual life insurance, right? Because you should know the difference. So everyone knows individual life insurance, right? So you go and get life insurance on an individual. So it's one person. So I go and get life insurance on myself, or I go and get life insurance on my kid or my wife or or my parent, doesn't matter. But I'm getting life insurance on one person, right? So that's individual life insurance. You have group life insurance. So now instead of getting insurance on just one individual, you get insurance on the entire group. And you have a lot of different types of group. You have labor unions. You have fraternal benefit groups. You have employer groups. So you have different types of groups, but the most common one is an employee group, right? So like you have a company, and that company will give out life insurance to their employees, right? That is an employee group life insurance. That is the most common. Now, some things to know. Number one, when you have group life insurance, you have a single policy, right? So instead of giving each individual member a policy, each individual member gets a certificate of coverage. And that certificate is called certificate of insurance. But because it's a group policy and it's a group policy, it's like this one umbrella, and you got everybody under this umbrella. That umbrella is called the master policy. And the master policy goes to who owns that insurance, right? So the owner of that insurance is the employer, right? So the employer will be the sponsor, right? So the employer gets it's called master policy, or sometimes it will be called master contract, but just no master. Why is the employer the master? Well, they are paying the bills, right? Like my mom always used to say when I was growing up, no, no, I pay the bills, I make the rules. If you don't like it, you can stop paying bills. So, 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 so yeah, so it's master. Who's the master? The employer is the master, right? Because they are paying, most of the time they are paying all the premiums, or they are paying 75% of the premium. So they are taking care of everything. They own the policy, so they get a master policy. So unlike individual life insurance, there's no master policy. No, you just get a policy, right? But group life insurance, you have two types. You have you have the master policy, and then everybody that's covered under that group gets a certificate of insurance. Now, the reason they get a certificate of insurance, because group insurance is not permanent insurance. So you got to know group insurance is always term insurance, never permanent insurance. And the reason they get a certificate is because that can be changed anytime. Remember, the insured in a life insurance policy, can never be changed. But imagine if you had group policy where everybody was like the insurer and it has separate policy, that means that every time that person leaves, you have to change and get a new insured. No, you can't do that. So what they do is they have this master contract, and they don't really care. The insurance company doesn't know doesn't know your name. Like it's not based on an individual. They're just going to say, okay, you have 500 employees. We're going to cover all 500 employees, and this is your rate. This is how much you're going to pay. That's it. So people come in and out. People quit the job. People get hired. Once you're in that group, you're automatically covered. The other difference between group life insurance and individual life insurance is when you get an individual life insurance policy, you have to prove that you are insurable, right? So you have to submit evidence of insurability. That means you're in good health. When you get a group life insurance policy, you don't have to prove anything, right? Once you're a member of that group, you're automatically covered. So you don't have to, you can have 6, 7 different diseases, diabetes, high blood pressure, whatever. They don't ask you individual questions like, hey, what's your health, all of that. No. Are you employed and have you met your minimum benefit requirements? That means for most jobs, you have to be on the job for at least 3 months before you can start getting benefits. If you meet all of that, boom, you're automatically covered. So they don't have to do an individual application on you, right? So that is the other advantage of group life insurance. So you don't have to submit any evidence of insurability, whereas individual life insurance, you have to submit evidence of insurability. The other thing with group life insurance, one of the things the insurance company does, like to underwrite the insurance, they'll tell you most of the time they're going to take the average age, because insurance most of the time depends, your premium will depend on your age, right? So the older you are, the more expensive your premium will be, and the younger you are, the less expensive. So they'll take into consideration your age. So most of the time for group life insurance, they're going to take the average age of the group, for them to determine how much premium the plan sponsor is going to pay. So they're going to say, okay, the average age of this group is 30. So if the average age of the group is 30, then the plan sponsor is going to pay less in premium than, let's say, you have an average age of another group that's 60 years old, right? So they do the average age of the group. That's another thing. For group life insurance also, group life insurance has, unlike individual life insurance policy, group life insurance has a convertibility option, and it's required by law. That means, you know what, I can take this group life insurance with me. If I leave my job, I have the right to take my insurance with me. So I have the right to convert this group life insurance that I had to an individual life insurance policy. And usually for most states is 31 days. So you have 31 days from the day that you quit your job. You have 31 days from the day you either quit your job or you're fired or you resign, but you have 31 days from when you leave that group for you to convert that group life insurance to an individual life insurance. Keep in mind that anytime you convert, anytime and always, when you convert from individual, from a group life insurance to an individual life insurance, your premium 100% of the time will be more expensive. More expensive. Why? It makes sense, right? Anytime you buy something in bulk, it's always cheaper than if you buy one piece at a time, right? That there's, like people go to Costco or Sam's Club. Why? When you buy in bulk, it's cheaper, right? So, but when you convert to an individual life insurance policy, because it's just one life, it's always going to be more expensive. So you're always going to pay more. When you convert from a group life to an individual life, most of the time you're converting to a permanent life insurance policy. Now, group life insurance, you have two types. You have something that's called a non-contributory group life insurance policy and a contributory group. What that means is, let's take the non-contributory group. When it says non-contributory, that means your employer pays 100% of the premium. You don't pay any premium at all, right? So, and those are the, you have some employers that will take care of all of that. So you don't pay any premium, they cover everything 100%. If it's a non-contributory group life insurance policy, then by law, or the insurance company will require everybody that's in that group that's eligible to be covered under that insurance. So if it's non-contributory, all the eligible employees or members of that group must be covered. Now, the other type of group life insurance is contributory life insurance, group life insurance. Contributory means that you, as the employee, a member of that group, because sometimes, you may have a church, may have life insurance for their members, or, or a sports team may have group life insurance for their member, right? So you have different groups. But let's just stick with employees here, with companies, because that's the most common. So it's contributory. Why? Because you, as the employee, you're contributing, right? You're paying some of their premium. So let's say if the premium is $100 a month, most of the time you're going to pay about $25, so 25%. So when it's contributory, both the employer and the employee are contributing to the premium payment. Now, when it's contributory, then the insurance company will require that at least 75% of eligible members of that group, people who are eligible to receive benefits, about at least 75% of them must be covered. So if it's non-contributory, just remember, A, it's free. So if it's free, then everybody got to be part of it, right? Because, hey, you have no excuse for you not to get this life insurance. It's free. Geez, everybody likes free, right? So if it's not going to cost me anything, sure, you can sign me up. I don't care, right? But if it's contributory, now people got to pay something. So they understand that some people, for whatever reason, will opt out. They say, oh, I don't want to pay 25 or whatever the amount is, $50 a month out of my paycheck. So I don't want the life insurance. So they understand that some people will not want to be part of it. So they say, okay, we get that, but at least 75% of your eligible employees must be covered. Now, you have to understand that a group cannot be established just for the purpose of getting life insurance. Nope, it cannot. So let's just say Rebecca, you, me, and 15 other people will get together and form our own association. We call it, the Fun Lovers Group, right? And then we have the Fun Lovers Group, but we didn't form that group to really have fun. We just formed that group for us to get cheap insurance, because when you get group life insurance, it's cheaper than individual. So we just established that group and we apply for group life insurance. That is not allowed. That is illegal. You cannot establish a group just to get life insurance. Why? Because group life insurance is always cheaper than individual life insurance. So that is not allowed. So the group has to be formed, established for a reason other than receiving, other than obtaining life insurance. So that is it for group life insurance. So that privilege that allows you to convert your group life insurance to individual life insurance is called a conversion provision. So on your test, they may ask something like, which of the following provisions allows an employee who quit her job to carry that over and get a permanent life insurance policy? The answer is conversion provision. So they may have something like conversion provision. They may have grace period. They may have reinstatement. All of that stuff. No. Conversion provision. Now, let's talk about premium payments. So for group life insurance, the premiums the employer pays are 100% tax deductible to the employer. All right. So the employer, can claim that on their taxes. It makes sense, right? Because anytime an employer spends money or a business or a company spends money on wages or employee benefits, those are all tax deductible expenses, right? So it's tax deductible to the employer. Your premiums you pay as an employee, they are not tax deductible, right? So your group life insurance premium, you can say, oh, I pay $500 in group life insurance premium this year, so I'll clean down my taxes. No, right? So those are not tax deductible. Now, like all types of life insurance policies, right? The death benefit from group life insurance are not taxable. So all types of life insurance, whether it's group life insurance or individual life insurance, whether it's term insurance or permanent insurance or modified endowment contract, whatever it is, one of the things you got to know is all life insurance, without exception, the death benefit is never taxed. So group life insurance is not an exception. The death benefit for group life insurance cannot be taxed. I'll stop here. Again, this is just a general overview of group life insurance. Any questions?
No.
No questions? All right. So again, so everything we just explained here, you have the explanation here. If you want to take a screenshot of this, you can take a screenshot, but this is, I mean, I just summarized everything, right? So I talked to you about, if it's a, the two types, you have the non-contributory plan and you have the contributory plan. It has to be 75% of employees have to participate if it's non-contributory, or that means 100% of eligible members have to participate. All right. So we talk here about master policy and certificate of insurance. On your exam, it gets tricky. They may say certificate of insurance and member, and certificate of authority. Like, which of the following does an employee who participates in a group plan receive? A, certificate of authority, B, certificate of insurance. So you see certificate, you're like, yeah, A is the answer. No, certificate of authority is the license that insurance companies get, right? But we don't call it a license, we call it a certificate of authority. So the insurance department is giving that insurance company the authority to do business in that state. Whereas certificate of insurance is to certify that Rebecca has life insurance with ABC, I don't know, that ABC Incorporated, right? So certificate of insurance is for group insurance. Certificate of authority is for insurance companies to prove that they have the authority to do business in our state. Any questions so far?
No.
Questions? Okay. So again, just went over that. What is true about group life insurance? Again, you answer all of this correctly. So we talked about the conversion privilege. You don't need any evidence of insurability when you have a group life insurance. Other thing to remember is group life insurance is always annually renewable term insurance. Okay, so they may ask you a question like, which of the following is most, or which of the following is associated with group life insurance? They may have annually renewable term, increasing term, whole life, whatever. It's always annually renewable term insurance. All right. So that is our overview of group life insurance. Any other questions so far?
No.
All right. So we're going to stop here for now, and I'm going to see you in the next lesson.